Good morning, everybody. This is the live market open for October 26th. It's Monday, and we have a new clock here in Europe and here and in London, of course. And we would like to get some feedback also on that. Would you prefer to begin at 8 London time or 9 London time? Okay. Anyway, I'm Yohay Elam of Forex Crunch and Market Movers podcast. And doing the show for FX Street as usual, we had lots of action in markets. As always, we'll review what happened, recent developments, talk about different charts and levels, examine the next 24 hours, and of course answer your questions. If you don't see the chat box under the video, it's tlk.io/fxstreet-forex-live-video. Looking forward to your questions. So, what did we have recently? Well, basically, Draghi. On Thursday, we had Mario Draghi providing his 5 blows for the euro, talking about a rate cut perhaps in December, expanding QE, extending QE, and also used words such as vigilant, which hint that action is imminent. He also expressed lots of worries about inflation, about the exchange rate, and the euro plunged. First of all, the euro plunged on its own, and then on Friday we had a rate cut in China. So it wasn't only Draghi, it was also what happened over there in China, which just last Monday, just at this time a week ago, we were talking about how China reported better than expected growth. That was exactly the Goldilocks levels, lower industrial production but higher services. And just 4 days afterwards, they cut interest rate. At first, it was good, for example, for the Australian dollar, more Chinese stimulus, good stuff. But later, it turned into worries about what's going on in the global economy, and the US dollar just raged across the board. So these were the huge developments on Thursday and Friday, and now we're seeing a bit of a correction. Okay, let's take a look at the charts once again. So if you can see here, we have euro dollar, 60-minute chart, spectacular drop from around 113, 113.50, all the way to 110, even dipped below 110. On Friday, we're currently at 110.40. We're seeing a bit of a correction. 110.48 was the high. Let's see if we can recover. Just after the show, we have, just after the show, we have the IFO business climate right here at 9 GMT, which is 9 in London, 10 in Europe. Let's try to see what we're expecting here. This is a key release for the euro because IFO surveys many more people than ZOO, and many people still trade the euro as if it were the Deutschmark. Okay, so the headline figure, the business climate one, is expected to slide from 108.05 to 107.8, and the current assessment also slide a bit, and also expectations. Let's see how, if you can see the chart here, it's been quite stable, even rising recently, in the past year or so. But there's the big question if Volkswagen, if the crisis there has a big impact on business confidence in the Eurozone. If we move to more events, let's see, we already have some questions. Good morning, Jake. Morning, Mauricio. Jake asks, what is the best setup for today? Interested to know your predictions on central bank policies this week. Okay, regarding central bank policies, we'll do a review of what's going on later this week, and of course we'll talk all about that. And best setup for today. Let's see the rest of the events for today and try to answer this question. So at 2 GMT, we have US new home sales. This is what I see as the main event. The Fed looks at home sales, which have been one of the stronger parts of the recovery, and I believe this could set the direction. I think that euro dollar is still in focus, where we've seen it stabilize over 110, as Mauricio mentioned here. But let's see if it can hold. If it's just a correction on the way down, which I think it is, or we could see a bigger move towards the upside. On the upside, we have levels such as 110.50, just above current levels, and then 111.65. maybe that's a bit old already. Maybe 111.40 would be more correct. 112.15, which is now weak, and of course 112.90, which we've seen the pair fall through. So I would say the focus is on euro dollar, remains such. And a lot depends on these two figures. On the IFO, German IFO, just in less than an hour, and US new home sales. Perhaps you could see a bit more of a recovery of euro dollar, but I believe it will only proceed further fall. So perhaps this is the pair to be looking at. Okay. Let's see what we're expecting for US new home sales. It's right here. We're expecting here. We're expecting more of the same, an annualized level of 550,000 new homes. It doesn't mean 550 homes are constructed at in 1 month, in the month of September, but actually that it's more annualized level, very similar to 552 seen back in August. Okay, so these are the events to watch. In addition, we have New Zealand trade balance, which is at quarter to 11 GMT. I don't know how many of you are awake at these or busy trading in these hours, but anyway, we're expecting another deficit, a more narrow deficit. Instead of over 1 billion, we're expecting around 800 million. Okay, so you don't have too many big events for today. We might get also today the Bundesbank monthly report. Also in the context of course, IFO, it's we're looking to see if we're seeing there's something related to the Volkswagen crisis. So these are the main events. But as you said, there are so many much more important events later this week. So we'll talk about that in a second. Let's just take a quick overview of the charts first. So we have euro dollar here at 110, almost 110.50. Let's see if it can break higher or not. That depends on the figure. Pound dollar, I mentioned it last week. I think Pan asks, I don't know if Pan is here, if this is just if this is a breakdown or not. Well, at first it wasn't a breakdown. The pair did just extend the down range under. It extended the down range from 154 to 153.80. Okay, but then we did see it move a bit lower to 153. Okay, so this was the low. Still, the pound is holding up relatively well in comparison to the euro, and when we also see the yen sliding quite a bit. Current levels to watch are 152.85 and 152. On the upside, I think 154 remains the resistance, just above 153.65. I think. Well, sorry, 153.70. Okay, dollar yen made a surprising move, and this is related to what I think will happen this week on Friday. We've seen, of course, dollar yen fall all the way to 118.10 2 weeks ago, then rise back to the hugging level of 120, and then we've seen it move last week higher, even break above the previous highs of 121.20. Okay, let's take a look at the daily chart to see that it went. See this high here of late September. So just a month afterwards, it made a small move above this level, went all the way to 121.45. Okay, still below this level of 122 that it is seen in late August, but and currently back down to the 120 handle, but out of range. Now, if we have a bad environment, a safe haven, or a sort of demand for safe haven, we would see the yen strengthening, right? But I believe that markets, after seeing Draghi, and then after seeing China, perhaps they believe that the Bank of Japan is going to act as well on Friday. So that's why we've seen a yen sell-off. And we had also recommendations from banks to buy dollar yen ahead of the Bank of Japan's decision on Friday. Okay, dollar CAD had a very interesting week last week, moving quite nicely. Well, not different directions. Went all the way down to 128.25. and then it managed to rise back up. We had elections in Canada last week, which saw a change of guard, Justin Trudeau being elected. Then we had Bank of Canada lower forecasts, and also oil prices are pressured to the downside. So we've seen the pair break higher, and the current high is 131.83. I see resistance is at 132.20, and support, well, a bit below the current levels of let's say 131.20. New Zealand dollar, I mentioned beforehand, it made this double bottom here at 67, actually dipped under 67 but managed to recover, and 69 remains high resistance. The trade balance is the next big event. Aussie dollar, well, it broke below this triangle, then found here support, dipped even below 72. Initially, it enjoyed the Chinese rate cut, okay, because more Chinese stimulus is more, investment or more buying of Australian commodities. But afterwards, the mood changed a bit, because if the situation is getting worse in China, getting worse in Europe, getting worse everywhere, we need more. We need to be worried, and everybody went towards the US dollar and against other currencies. Good morning, Zaire. I see you have a question. Not able to watch live. Can anyone tell me what happened to euro dollar? I hope you can see the live show. Anyway, what happened to euro dollar? Well, of course, it's Draghi, which talked about the 5 things. Let's see if we'll have time to return to it, because we talked about it at the beginning of the show, but basically hinted of action in December, and that was quite devastating for the euro. Okay, now let's talk about what we have this week. These are the events for today. Early tomorrow, we have nothing on the agenda, but on Tuesday, tomorrow morning, after the show, we have UK GDP. We're expecting another quarter of nice growth. The UK economy is growing quite nicely. They believe that will remind us that the pound is relatively strong, that the UK economy is doing well, and we'll see the pound rising. We have durable goods orders on Tuesday in the United States. This reflects investment, especially the core durable goods orders, consumer confidence, to show if perhaps consumers are more confident, as we've seen in the University of Michigan, or in reality, are they buying less, like we've seen in the hard data. But the big events begin on Wednesday. We have Australian CPI for the next direction of the Australian dollar, the rate decision in New Zealand, but beforehand, the Fed decision. So we have the Federal Reserve convening this week. It's this meeting is a meeting that does not consist of new forecast, does not consist of a press conference by Janet Yellen, but it's still important, because every small tweak, every small twitch in the statement can have a significant impact on the direction of the dollar. On one hand, we had last time we heard from Yellen and from Fisher, but especially from Yellen, they did talk about raising rates in 2015. Since then, we had poor data, poor NFP, poor retail sales. Not everything was bad, but and we heard from Brainard and Tarullo talking about waiting for quite some time. Okay, so these are the things to consider. They might acknowledge the weakness in the US economy, but I'm not sure they will release a hint towards December. Currently, there is a clash between economists that do see a hike in December, and bond markets which show no chance of a rate hike until March 2015. Will they acknowledge the weakness? Probably so, but probably not release any new hints. What we can extract from the Fed decision, as I see it, is the next event that we have the following day on Thursday. We have US GDP, and the Fed will probably have it in front of its eyes beforehand. Okay, and if we have something more upbeat in the statement, we can expect to see stronger GDP on Thursday. If we have something more worried, darker clouds, we can expect something very poor growth in Q3. In any case, expectations are for lower growth than the strong 3.9 that we've seen in Q2. Anyway, we'll talk about that, of course, in detail on Wednesday. So that's the Fed decision. On Thursday, we have a GDP that just talked about that now. And on Friday, we have Japanese inflation, and later that night, the rate decision. Okay, so in Japan, we're expecting their expectations are huge. Why? Because this is when the Bank of Japan releases the semi-annual outlook. So far, the government said quite a few times that more action from the Bank of Japan is unlikely. It's important to remember Japan does the most massive QE in comparison to its GDP. The first move came in April 2013. The second one just 1 year ago in October 2014, and inflation is picking up just a bit. Okay. On the other hand, I did change my mind over the weekend around this, because after Draghi talked about more QE, Chinese cut rates, everybody's sort of participating in these currency wars, and I think we might have a better chance of action. Okay, so these are that's the main events. Let's see, I see you have more questions. A question from Paul says, hi, do you think that pound Kiwi has bottomed and is it due for a bullish run? What target stop loss would you trade long position? Thank you. Okay. Let's see, it's not a pair I follow quite often, but let's examine it. Okay, we have, let's put it on the... In general, the pound is sort of a normal currency and things are going well in the UK, and New Zealand is a risk currency, but one of the stronger risk currencies. So let's put a few lines here on the chart. First of all, I think we can draw here a double bottom. That's 224, more or less, okay? I'm sure you have more exact levels on your chart. We have also here recent resistance at 228, and yeah, with resistance early in the month now once again. And another line is here, the recent high here of 230.35. Okay, these are the levels. Did it bottom out? Or is it a dead cat bounce, and is it expected to fall a bit more? Stop loss. I'm not sure it's the end of the fall. New Zealand things are looking okay. So yeah, it fell quite a lot in recent days. Let's look at the bigger picture. On the daily chart, wow, quite a lot of action. Earlier this year, we saw it jump higher on the fall of commodity currencies and the stable pound. Rise quite a bit, all the way above 255, almost 255, and then it fell. General direction, I think, trend remains to the upside. So yeah, I think long would be better. Of course, this isn't trading advice. Where would I put a stop loss? It's hard to say, but I would say around, depends on the length of the move, but if you expect it to rise to resume the uptrend, I would take a wide stop loss of, let's say, 220, and expect it to move much higher above the previous levels of 250. But as I said, it's not trading advice. According to fundamentals, there's a good chance of pound rising against the Kiwi, and maybe this fall has bottomed out. I'm not sure. But for I think there are more vulnerable commodity currencies such as the Canadian dollar and the Australian dollar to trade. Okay. Another question from Jack Sirwell. The drop in cable was kind of surprising considering the euro pound dropped too, and the GDP strength. Yeah, indeed. We've seen, first of all, in reaction to Draghi, euro pound fell quite a lot because the pound was holding stable. It was just a bit carried away, but not too much. But then also the pound began losing ground against the dollar. The dollar became really king on Friday. And so we've seen also the pound getting carried away against the US dollar. US dollar even gained against the safe haven yen, okay? I think this is also related to positioning. We had quite a few weeks sort of the market bashing the dollar more or less, and we've seen the move to the other direction. Currently, the Fed is the only central bank to hike. It's going to hike first, make monetary tightening earlier than the others. But UK is next in line. That's why I still see the pound stronger against the Kiwi that we talked about before, and also against the US dollar. Against the euro. So we've seen the move. I see pound euro continuing its falls. Perhaps also here, like pound Kiwi bottomed out. Perhaps euro pound has topped out, and I see it falling further. The falling drop in cable. Yeah, I also see it as surprising. I see it as exaggerated, and well, the pound is second to the US dollar, but the fall that we've seen on Friday was a bit exaggerated. I think that tomorrow's GDP figures in the UK will provide reasons to be cheerful, and not a big rally on the cable, but some kind of stabilization, because I think the fall is a bit exaggerated. Another question from Jax Rawal: what do you think about inflation? IMF, sorry, talking about yuan as a reserve currency. Well, that's what the Chinese authorities want to see, don't they? They made the move in August, and they widened the band of the dollar yuan and made some other changes for the sole reason of making it a reserve currency. Of course, this is a very long process. The Chinese economy is the second largest in the world, and if you count the Eurozone as one economy, it's more or less the same size. But who trades the yuan? Everybody trades euro dollar, and then the pound and the yen and the Aussie and the Swissy and other currencies. I think it'll eventually happen that the yuan will turn into a reserve currency, because it's a huge economy and it's becoming more and more open to the world. Okay, but it'll still take time. And it's important to remember regarding this IMF thing, that the news actually came from the Chinese. They said that they received strong hints from the IMF that the IMF will acknowledge it as an SDR. In any case, even if China enters the basket of SDR of the IMF, it doesn't mean that we're going to see huge flows into the Chinese yuan, okay? I believe we'll see only limited moves over there. So it's important politically. I don't think it'll have an impact on currency markets for the upcoming future, for the near future at least. And anyway, the road is quite long, and it also depends on the strength of the Chinese yuan. So if the Chinese economy is looking worse than it looked beforehand, it isn't good news for the Chinese yuan becoming a reserve currency. Okay, I hope that answers the question. Any more questions regarding charts, regarding fundamentals, more events this week, what happened beforehand, what we think will happen afterwards? And I want to ask you guys a question. What time do you prefer? Is it continuing? Is it 8 in London, 9 in Europe, or which we're doing today, or beginning at 9 in London, 10 in Europe, like we did until last week? Do you prefer earlier or later? We're going to have the same hour tomorrow as well, but we're certainly open to your questions regarding the time of the show. Okay, so please let us know in the comments, or send direct messages, whichever means of communication you wish. We want to adapt the hour to be the most comfortable for you guys, our viewers, listeners, readers. Okay. Another question from Jack Sarwell. In the meantime, also the Chinese just outright trying to manipulate currency and maybe start the currency war? No. Well, they did manipulate their currency, weaken it for a long time. What they did in August, they wanted a small depreciation to actually, I believe, to reflect what's going on in markets, and also to get the approval of the IMF to get it into the SDR basket. What happened afterwards is that we saw much bigger depreciation than they wanted, and they began intervening actually to strengthen the Chinese yuan. They didn't want a capital outflow. I believe that currently, at the moment, if there was really free trade, the Chinese yuan would have been weaker, not stronger. And I think everything that we hear from U.S. politicians regarding Chinese being manipulative. It belongs to the past. It used to be like this in the past, but not in the current situation. So, any case, the US also prints money, Japan prints money, and the Eurozone prints money. I think there's global currency war. The Chinese are at the moment no different. Maybe 10 years ago, China did artificially hold the value lower and to strengthen its economy, to strengthen its export. Now it wants to rebalance, and I don't see it as manipulating the currency. Okay. So Paul says, what is your strongest personal trade at the moment? Trade I'm looking at mostly is well, euro dollar for today, but tomorrow the currency in focus is the pound. Paul also says same time for the Aussies, 7 p.m. Australian Eastern Time. Let me try to calculate what time that is. In the meantime, let's take another look at the charts. Euro dollar continuing higher. Always in this time of the morning we have stronger moves, right? But a lot depends on what happens afterwards. Let's see what 7 p.m. That would be 10 a.m. in Barcelona, which is my time here, and that would be 9 in London. Okay, so you prefer the previous timing. Thanks. You're trading aggressively right now, if anything. Asks Paul. Currently, I'm not trading. I'm focusing on publishing. So, my sentiment is still bullish on the US dollar. Jack Sarwald asks, what about the Saudis crying about oil supply in the US? Well, the Saudis got what they wanted. I think they got, they managed to maintain their market share. Okay, Saudi Arabia basically it had the strongest opinion on not cutting production in November last year in that OPEC decision, and that accelerated the crash of oil prices. They didn't want US shale to take too much of their market. I think they did succeed in that, but it's a boomerang because prices of oil fell so much. Okay, it stopped development in the United States, but also hurt the Saudi economy. Now it's beginning to consider some cuts, and there are worries that it could run out of money at some point. Perhaps everything is a bit exaggerated, but Saudi Arabia is an authoritarian country. The regime needs to keep people happy, and if it doesn't have, people got used to having to be swimming in cash, and now if these things kind of change, it's a problem for the United States, a problem for Saudi Arabia. Of course, weaker oil prices is also bad for the U.S. Mining industry for oil production in the United States, but also for Saudi Arabia, of course, they would like oil prices to be higher. So they did succeed in recapturing market share, but I think they would have liked oil prices to begin going up, and it's not happening anytime soon. Paul says, for your webinar, same as it has been. Thank you. Okay, you're welcome. More questions, more feedback about the time. Let's look at a few more events that we have this week. Just finish what I've prepared. Friday, we also have important figures elsewhere. We have in the Eurozone, we have CPI, German inflation already on Thursday. And then on Friday, we have inflation data for the whole Eurozone. This could provide us another hint about how serious the ECB will need to be in December in cutting and perhaps cutting the rates and more QE and things like that. Currently, no changes expected. In Canada, we have GDP. So we have a break from Canada after a very, very busy week. But then we have more data in Canada on Friday to see how deep the recession is over there. Okay. To answer Zara's question from earlier, we have another question from Jacks are wild. With all this commotion, will all this commotion cause oil prices start to rise? Um, um, I'm not sure because eventually we're already seeing less investment and eventually less production. But in the next few months, we still have inventories are reaching their full capacity in the United States. Just too much oil in the market, less demand because of lower growth. So less demand and more supply. See prices remaining depressed for many months to come. Okay. Paul asks, I'm curious about dollar CAD and oil prices. Okay. So dollar CAD is of course very, very correlated to oil prices. For many months, we've seen the Canadian dollar fall each time oil prices fell. And of course, if we compare it to last year, it's a huge move on the Canadian dollar, okay, because of the fall in oil prices. So if we look at when we had the OPEC decision last year, uh, dollar CAD was only around 115, and now it's of course much higher. We've seen dollar CAD rise to a high of 134.60, which is the highest level in 11 years since 2004. And we've also seen a phenomenon of each time that oil prices did recover, the Canadian dollar didn't recover too much. Okay, this has faded away now. The moves are more correlated, more oil up, CAD up, oil down, CAD down. So it's a bit better correlated. And now it's less one-sided. The market is more balanced. But in general, we have Bank of Canada lowering forecasts. Oil industry is still suffering. There's a new government, but I don't think it's that important at the moment, at least until they announce big measures. And so that's the relation. Good point about CAD. Thanks. What are your expectations about Canadian GDP, if any, please? Well, let's look at what markets are expecting, right? This week we have Canadian GDP. Look at the FX Trade calendar. This is the FX Trade calendar on the Forex Crunch website. So it's on Friday, okay? Here we go. It's a monthly release, contrary to other countries that release it on a quarterly basis. So, and for the month of August, we're expecting a small rise of 0.1%. I believe it'll be around that. I think market expectations regarding Canadian GDP are not that far from reality. Okay. In July, it was relatively strong, 0.3%, the first month of Q3. And now we'll have more data for Q3 with slower growth expected. Okay. Q1 and Q2, Canada saw a downturn in the economy. Okay. Of course, we'll talk about that more in detail on Friday. Rob, good morning, asks, how is Russia handling the low oil price? Well, Russia is suffering. It hurts them. In Russian economies, I think, already in recession and expected to be in a deep recession in 2016. I think part of the move to intervene in Syria is sort of to divert attention from the deteriorating state of the Russian economy. Of course, it's somewhat balanced out. Well, we have lower prices of oil. We have the ruble, the Russian ruble, much weaker than it used to be. So this is sort of balances it out. But on the other hand, Russia does import lots of stuff from abroad, so it makes it expensive, and inflation is a bit higher. I think it's a much bigger issue than the sanctions, lower price of oil, and we'll see how that pans out. But it certainly weakens the Russian economy. Okay, we have a few more minutes. More questions. Again, I want to ask those who we've had one answer from Peter regarding the time. Sorry, from Paul. Sorry. I want to ask you guys again, what is your preferred time? 8 GMT, which is 8 in London and 9 here in Europe, or 9 GMT, which is 9 in London and 10 in Europe, like it used to be. Okay. So Paul prefers like it used to be at, which means 9 in London, 10 in Europe. They want to ask the rest of you guys, what do you think? What's your preferred time for starting the show? Okay, let's take another look at markets. Dollar CAD that we talked about just now, 132.20 is resistance, currently at 131.40. Big event is Canadian GDP, but of course it depends also on the Fed. Euro dollar, we have 25 minutes to go until the E4 release. 110.50 is the line that I see as resistance, and then followed by 111, 111.40, support 110 and 109.50. Okay. More questions? Oh, another news that we had over the weekend that may have eventually some impact. We had the European Union struggling to find a solution for the refugee crisis. More clashes between Germany, that wants more refugees to then Eastern countries like Poland. We had elections in Poland, seeing right-wing party win the elections there, and we'll see if we have ramifications of that. So Rob says time is good at the moment. Rob, do you mean this time at 8 GMT, what we began today, or the times that we had last week? In any case, we're asking everybody. I want to know what time is the best for you guys. And yeah, let's look at a few more charts. Thanks, Jax. Jax said, whatever time is good for you is good for me. Thanks. Dollar Swiss. Dollar Swiss, of course, I think we talked about this on Friday. There's a good chance that the Swiss National Bank intervene once again in markets on Friday, because the euro weakened a lot. That meant the Swiss franc strengthened against the euro. Not good for the Swiss economy. And sorry, that's why we've seen. Then we've seen, of course, the dollar strengthening across the board, but beforehand, we've seen some kind of intervention. Now we're seeing once again this morning the Swiss franc strengthening against the euro, and we're once again under 108, and not that far from levels we've seen in September, but still around the lows. Okay. Euro pound 72. We talked about that. We have a question from well, Rob says yes now, so Rob prefers the earlier hour. Paul prefers later, and Jack Sorwild is okay with any hour. So far we're in the middle. Paul asks, what's your favorite website for free Forex data intelligence or market intelligence? Example, Zero Hedge. Zero Hedge is not one of my favorites. Well, yeah. First of all, I provide information on Forex Crunch, and of course I use FX Street. For more information, of course, Bloomberg has good articles on Forex intelligence. Reuters also as well, and of course Forex Live. It's a great website. It's less, if you would say, intel. It's more about flashing breaking news and quick analysis. They do a great job as well. Of course, we're here in the show for FX Street, and I'm a Forex Crunch, so please come to these websites before you go to any others. But in any case, of course, for my research, of course, I use many other websites, and those are the ones that I'm following closely. You can check out my the people I follow on Twitter. Twitter is it's a great tool for news. So you can see who I'm following, and I have a list on the site, the top Twitter accounts to follow. Again, can see who I'm following. That's where I take my information from. Quite a big bunch of people. Okay. Euro dollar now weakening a bit more. Perhaps traders are afraid that the IFO figure will be weaker than expected. Okay, we'll know the figures in just 20 minutes. Okay, so I guess it's time to wrap up. Let's begin from the beginning. This is the live market open wrap of Monday, October 26th. We have a fresh beginning after dollar reigned strong on Friday. We had recent developments were, of course, Draghi, which still has a big impact on the markets. The euro crashed because of big, thick hints about action in December. We had, following that, on Friday, we had a Chinese rate cut, which was at first seen as stimulus, good for the Aussie, but then devastating because the world is in trouble. Everybody went to the safe haven of the dollar. Even the yen lost ground because after Europe and China, many are expecting the Bank of Japan to ease on Friday. Okay, so we've seen these kind of moves on charts. Euro dollar crashing, found support at 110 late on Friday, dipped a bit below but above it. We're expecting today the IFO figure in just a few minutes to determine the next move of the euro. For the short-term move, of course, 110.50, 111, 111.40 are above, 110, 109.50 are below. Later, of course, the dollar strengthened against other currencies. To see the next direction of the dollar, we have U.S. new home sales at 2 GMT. Okay, there we're expecting to see stable, solid growth, and this should support the U.S. dollar. Later, we have also New Zealand trade balance for those of you trading the Kiwi. Looking at the charts, pound dollar got carried away and dropped a bit against the US dollar, but of course it's much stronger against the euro. Tomorrow we have UK GDP, and that could that could perhaps strengthen the US dollar. Dollar yen went all the way above the highs of 120, 120 and almost reached 120, 150, but now it's falling back down on the weakening of the US dollar at the beginning of this week. And we may see it continue. Let's see, I believe we might see it hug 120, but all eyes are, of course, on the Bank of Japan. If they act, weaker yen. If they don't, stronger yen. Dollar CAD, an eventful week last week in Canada. Elections, rate decision by the Bank of Canada, and lower oil prices. All in all, a weaker Canadian dollar, rising dollar CAD rising from the lows. 132.20 is the level to watch on the upside. Okay, Kiwi dollar holding on quite well despite the falling milk prices. 67.40 is support, 69 is resistance, 67 is another level of support. Aussie dollar still struggling around the 62.80 line, a bit below. Now it's a bit higher thanks to a weaker dollar, but the Chinese stimulus is a double-edged sword. It also reflects some kind of panic in markets, panic in the Chinese authorities, maybe not panic, but worries that they need more stimulus to keep the economy running fast. Okay, and this is of course a very important week. We have tomorrow UK GDP, durables goods orders for the Fed. It's important. Consumer confidence, which may be overlooked because of retail sales. And then on Wednesday, the next move for Australia depends on quarterly CPI and, of course, the Fed decision, all important. I think we won't see anything big in terms of hints about December, but we may have a hint about GDP, which comes in on Thursday, and where we could see perhaps a weakening of the US economy. On Friday, Japanese decision, talked about that many times, with inflation, and we'll see how deep the deflation here is in the Eurozone, and the Canadian GDP to close the week. Quite a busy week at the end of the month as well, and towards next week's NFP, but this week is busy enough with, at least in the United States, GDP and Fed decision, and decisions from Japan and from New Zealand. So I believe that today we're seeing some kind of correction in the US dollar. The big question is, will this correction continue or not? or will the dollar continue higher? In any case, this is the show for today. The clocks have shifted here in Europe, in the UK, and we're asking you guys, what is your preferred hour? Okay, do you prefer that we start like today at 9 o'clock London time, or do you prefer like sorry, do you prefer like today at 8 o'clock London time, or do you prefer like last week at 9 o'clock London time? So far, the answers we've received have been equal. So tomorrow we'll continue with the same hour like today, 9 at London, 8 at London, 8 GMT. But we're looking for more feedback to determine the best hour for you guys for the show. Okay, so thank you very much, everybody, for participating, and hope to see you tomorrow. Safe and successful trading. Goodbye.